Well, hello everybody. This is Rob joining you for a little bit of some candlestick talk. All right. Let me give you a quick little bit of background, just a little bit about when I started trading. And when I started trading, I was really into indicators. And what I meant by that is stuff like stochastics, MACD, Bollinger Bands, because all those indicators to me, they seem pretty easy, stochastics, when two lines cross, do this, and that to me was, oh wow, that's easy. That's easy. When this line does this, do this. And I remember one of the guys that traded next to me, he didn't have any indicators on his chart at all. And I remember thinking, well, how can you not have any indicators? Like, you need to have indicators. And he said, no, it's all about the candles. It's all about the candles and price and volume. And I thought to myself, this guy's crazy. And I kept watching him, and he was great. He was really, really good. And I started challenging him more and more about, well, why don't you use this indicator? He's like, well, that indicator is going to keep you out of trades because it's going to tell you it's overbought. And that's just when it's getting good. And sure enough, he was right. So he made a believer of me. And for me, these candlesticks are just so beautiful. So beautiful. Now I'm going to give you a name here, and I'm going to give you a book. You don't need to run out and grab it, but let me give you a little bit of background. So I really fell in love with the candlesticks and the charts and support and resistance. And I got rid of a lot of my indicators I was using, and I just focus on these. And the pioneer of Japanese candlestick charting is a gentleman named Steve Nissen, N-I-S-O-N. And he is the pioneer. And the origin of candlesticks, pretty cool story, was that there was a group of Japanese merchants who bought and sold things like gold, silver, cattle, commodities. They actually would track the prices that they were buying and selling things for all around Japan. And they actually would chart the prices. And by charting these prices, they actually started to recognize some patterns. They started to see some patterns. They started to see when certain patterns came up, they could predict certain things were going to happen. And within the next 10 to 15 years, they'd basically put everyone else out of business. And they actually got the legend that these men were either gods or had the gift of the gods because they were always buying and selling at the right time. Well, they were just using charting methods. And so this is the origin of where these things come from, was from back in Japan. So back in 1999, I actually bought Steve Nissen's book. Now, I hope everyone can go back to 1999. 1999 was the stone ages of the internet. Amazon was still being run out of a garage. Prices for things were still very high, and I could only get this book in hardback, and the book was $300. And I remember thinking, $300 for a book? That's insane. But I decided to buy it. And when the book was shipped to me, I had to pay like $30 in shipping because this book is literally, it's like probably 3 feet tall, 1.5 feet wide. It weighs like 30 pounds. And inside of this book was 700 Japanese candlestick patterns. And I thought to myself, oh my gosh, this is going to be awesome. And I went through that book, and there's definitely such a thing as too much information. It was too much. I actually thought to myself, I think I just wasted $300 on a book. I haven't opened that book in 10, 12 years. It's great, but there's really only a few things you need to know. But I really fell in love with the candlesticks. And it all comes off of what we call a bar chart. So Before we get into it, this is something we've already discussed in FX Master, but just a little quick refresher. A bar chart is also called an OHLC, open, high, low, and close. So we have bar charts and we have candlestick charts. So candlestick charts are definitely the charts that you want to use. You can use a bar chart. It's literally the same information, but it's definitely easier to see these patterns as they develop. So as you can see, on the top is a bar chart, on the bottom is a candlestick chart. Like I said, it's the exact same information, but it's just presented a little bit more visually. And we're going to talk about how we can use the visual aspect of these candlestick charts, and it makes it much easier to see when there's changes in supply and demand. So if we take a look at an OHLC candle, or an open, high, low, and close, on a bar chart, the slash to the left is always the open. The lowest price it traded was the low, the highest price it traded was the high, and the slash to the right is the close. Open, high, low, close. So what this is doing is this is telling you a story. This is so much better than just a line chart. You know, a line chart is just, this is what the stock did or the currency did or whatever it was. This is telling a story. It told you that it opened up here, it went down a little bit, then throughout the day it ran all the way up to the high, and then it backed down to the close. Over here is the same information. On a candlestick, if it's an up day, if the open is higher than the close, you're going to get a white candle or a green candle. You actually can pick whatever color you want, but this is just an up candle. Same information. It opened up, went down to this low, went all the way up to this high, and went to this close. Now I want you to think about why this is so powerful. If we see an up candle, what that means is we know that during this period, during this candle, we know for a fact that there was more buyers than sellers. Now how do we know that? We know that because the price went up. The only way for a price to go up on anything is if there's more buyers than sellers. That's why prices go up, supply and demand. If you have a down candle, it's the same thing. Open to the left, it went up to this high, went all the way down to the low, came here to the close. Same thing on a candlestick chart. So if it is a down bar, again, it could either be red, it could be black, you get to choose the color. It's already telling you that during this period, we know for a fact that there was more sellers than buyers during that period. How do we know that? It was a down candle. The price went down. The only reason a price goes up and down is from supply and demand. Now we're going to talk about two things. We're going to talk about the body of candles, and we're going to talk about the wicks. So again, we've got the bodies and we've got the wicks. Both of these tell us very, very powerful information. So again, the wicks on the top and the bottom. All right, so let's jump into this. I absolutely love these candlestick patterns. And as I was transitioning from using indicators like stochastics, on balance volume, MACD, this or that, I threw all those away and I really fell in love with these because I felt these give me a much better idea of what was happening. Because it wasn't a derivative of supply and demand. You got to understand that all of the indicators are derivatives of supply and demand. You know, they take what's happening on a chart and put it into a formula and it spits out a number or a result. It's a derivative. It's a derivative of what supply and demand is. Looking at the candles is analyzing supply and demand directly. Not a derivative of it, but directly. So as we look at candlestick patterns, these candles are going to tell us everything. They're going to tell us everything. And there are certain candles that are very, very important when we see them. They actually tell us what is most likely going to happen. So before we really jump into these candles, I really want to go through the idea of supply and demand. Supply and demand is just such a big part of it. And I want everybody to to completely throw away everything that you think you know about trading. Throw it away. All those books you've read about on-balance volume, Fibonacci retracements, scan lines, all that stuff, throw it away, because you're missing the point. The only thing that matters as a trader is supply and demand. All of that stuff you've been studying is trying to find out where supply and demand is going to be in the future. But you forgot that. You've gotten off into left field thinking that Bollinger Bands mean something. It doesn't. It's a derivative of supply and demand. As a trader, you don't care what the currency is. You don't care if it's the Aussie. You don't care if it's the pound. You don't care on a stock. You don't care if it's Apple. You don't care if it's Walmart. It doesn't matter. In trading, none of that matters. What matters is there's a price. There's a current market price. It's at $100, whatever it is. It's going to go up or down based on supply and demand. Your job as a trader is to be on the right side. I hope everyone sees how complex everyone tries to make trading. Now look, I'm not saying that trading is easy. Trading is really hard. But it's actually quite simple. It's actually quite simple. Throw away all that crap that you've learned over the years. I shouldn't call it crap. It's actually very valuable, but what happens is people get so far off into what I call left field, they forget what it is they're trying to find. They're trying to find out, is this stock at 100? Is there going to be more buyers or sellers in the future? So that's what it is. All right, so this is where we're talking about candlestick charts. And to introduce you to candlestick charts, I'm going to introduce you to these balance scales. Now, you've all heard of balance scales before. And I actually have some balance scales that I purchased, and I put them in my office. I put them in my office because this is such a meaningful, valuable thing to me. This idea of supply and demand. So everyone knows these balance scales. Everyone knows that when you put something heavier on one side, you're going to get a change. These are going to shift. If you put more on one side, the other side's going to go up. And if you get them to where they're even, it means there's an equilibrium. So when we take a look at these balance scales, and I want you to get the idea of these. And I also tell everyone, you know, as a trader, I love having these balance scales in my office. I'm actually looking at them right now. Because it really helps me remember how simple this is. Buying and selling demand. Are there more buyers than sellers? Now, during any period of time, you're going to have currency that goes up. You're going to have a currency that goes down. When it goes up, the only reason it's going up is that there's more buyers than sellers. That's the only reason. There's no other reason. It's not because Apple released the new iPad. It's not because anything happened. It's because there's more buyers than sellers. That's the only reason that a currency goes up. That's it. Don't make it overcomplicated. Now look, there's a lot of reasons why there's more buyers than sellers, but who cares about that? All we care about is that that is why it's going up. And then every single stock, every single future, every single currency, everything that has a price, at some point prices will go down. And why are they going down? They're going down because there's now more sellers than buyers. If there's more sellers than buyers, it's going to go down. It doesn't matter if Bollinger Bands say this. It doesn't matter if you think it's a good company. It doesn't matter. None of that matters. What matters is there's more sellers than buyers. That's the only thing that matters as a trader. So I really want you to have these balance scales in your mind, because when we get into the candlesticks here in a second, you're going to see that every single one of these candlesticks tell you a story of where we are in this, because we've all seen that currencies, stocks, futures, everything Sometimes they go up, sometimes they go down, sometimes they go sideways, sometimes they go down, sometimes they go up. All that's happening is these balance scales are shifting. More buyers than sellers, equilibrium. More sellers than buyers, equilibrium. Goes back to more sellers than buyers, equilibrium. All that's happening is these balance scales are moving. So what we need to do is we need to recognize when those changes occur. And it all shows up in the candles. So one of the first patterns I want to teach you is the doji. The doji is a really great little pattern. And a doji is a sign of indecision. We have candles that opened up, went down a little bit, throughout the period went all the way up and closed near the high. So think about that. Where were those balance scales? During this entire run, our balance scales were clearly shifted. There's more buyers than sellers. There's more buyers and sellers in the first white candle, more buyers and sellers in the second candle. Look at this next candle. At one point, sellers came in, but by the end of the candle, the buyers came back in and it closed up closer to the high. So during this part, we are seeing that there is more buyers than sellers. Now, obviously, that's going to change. At some point, that has to change. Now, it might not be after 20 candles. It might not be after 50 candles, but at some point, that will always change. That change is going to be evident in the candles. So as you can see on doji, all a doji is going back to an equilibrium. On the day of the doji, we had it go up a little bit, went down a little bit, but during that period, whatever that period was, a 15-minute chart, an hour chart, a daily chart, during that period, everything went back to equal. There's no longer more buyers and sellers. Now again, that's the first sign. We went from having more buyers to sellers, we went to equal. If the next candle is a down candle, which sure enough it was, it's now telling you the balance scales have shifted the other direction. We've now shifted the other direction. There's now more sellers than buyers. And now you can see the candles are telling you that the sellers are now in control. It's opening up at the high, it's going down and closing near the low. That doji told you that was the change. You're going to see these dojis at the tops and bottoms of pivot points all the time. Again, the dojis, you'll see them all over the place. So one of your assignments after this session is to go out, look at charts, identify these dojis. Now I want you to, when you go look at charts, understand that if you look at a 1-minute chart, there's going to be lots of garbage. You're going to get lots of false signals. The longer you go out, the signals become more accurate. They become what's called less timely and more accurate. So I would say go and look out at things like hourly charts, 4-hour charts, daily charts. You'll be amazed. You will see these doji patterns all the time at tops and bottom. Now, it doesn't mean, just because we see a doji, doesn't mean that that's when it's going to reverse. We have to wait for the confirmation. We have to wait for it to finally turn. But again, as we go through all these patterns, I want you just to, I don't want you just to know about what a hammer candle is. Again, this is a hammer candle. I want you to understand what it's telling you. Look at this price action. During this 4-candle period, our supply and demand equilibrium was down. Our balance scales were shifted. There's way more sellers than buyers. Now at some point that's going to end. We're going to see that in the charts. A hammer telling you that, look, at the very bottom of that candle, things were ugly. Things were grim. The sellers had all the control. But by the end of the candle, more buyers came back in. And they ran all the way up to the high of the period. That is a very strong reversal candle. Now that doesn't mean that it can't turn around and crash after this. It sure can, but it's a signal that the supply and demand equilibrium is possibly changing. And then when we get candles like this, it's telling us, yes, now we're getting opens down at the low, we're getting buying throughout the whole candle. It's now telling us The demand has changed. It's changed, and now there's more buyers and sellers. Now look, that can end at any time. It can end at any time, but at least for the moment, we know we're in a situation where there's more supply and demand. So again, we have dojis, we have hammers. On the other side, we have shooting stars. This is literally the exact same thing as a hammer. Look at this. We've had upward pressure. So again, if we take a look at our balance scales, we had more buyers than sellers. We had it for 4 or 5 candles. We get this. It's telling us at one point there's a lot of energy, and then it came all the way back down. So during this candle, the supply and demand balance changed. And then sure enough, we got a downward move, and now we've got more sellers and buyers. Again, I want you to really keep balance scales in your mind, because this is how everything moves. Stocks, bonds, futures, currencies, commodities, they all move like this. If you can understand this concept, it really helps you in your trading. It's so much more important than a Bollinger Band. This is supply and demand. This is what we're looking at. All right, again, you're going to see these reversal patterns. You're going to get, again, take a look at this right here. We had this going down. Again, let's just say these were down arrows, down candles. We get a doji. A doji is a sign, hey, it might be turning. We got this inverted hammer where it gapped down, it ran up, it ran out. We have another doji. Look at all these reversal patterns. It's telling you there's no clear direction at this point, where before there was a clear direction that there was more sellers and buyers. During these 3 candles here, it's more equal. Things are opening and closing at the same place. Again, it's your first sign that there's a possible change in that balance scale. And sure enough, it moves the other way, and now we are more buyers and sellers. I did that wrong, but you get the point. So again, we have these candles with just what we call a body. These are just normal candles. They tell us a story. Like during this candle, this is telling you a really clear story. It opens, this hardly went down, and then through the whole candle, it went up and it closed right near the high. This is telling you that even at the end of this candle, there were still more buyers and sellers. From the beginning of the candle, there's more buyers and sellers, and at the end of the candle, there was still more buyers and sellers. But here we get this reversal. We get this hangman pattern. At some point, it opens up. It might have gone up a little bit, come back down, comes back up. It's telling you, hey, there's a potential change here. Now, we don't know it's a change yet until we get the next candle. The next candle is what we call the confirmation candle. And this is telling us that, yes, this is where the supply and demand changed. It's where it all changed. So again, I know I'm kind of going through these patterns, and I'm going to send you out. If you want to learn these patterns, learn them by name, that's great. You know, I highly recommend at least going on to Steve Nissen's website. You know, I think he even does some free classes now. Don't go overboard. Candlesticks are just a part of what we do. But I really want you to understand how it's telling you a story. You know, and I want to go through, you know, here's another one called a bullish engulfing candle. So here we've got nothing but selling. We've got more sellers and buyers. It's very clear that there's more sellers and buyers. Why? Because price keeps going down. But take a look at the candles down here. We got really big wide bodies here telling you that, hey, there's a lot of imbalance here. But all of a sudden you start to see a smaller imbalance, a smaller imbalance. Again, these are all signs that the change is coming. And sure enough, we get a gap down here, and there's nothing but buying on this candle. Buying, 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 buying. Closes up at the high. So it was during this candle that the supply and demand balance changed. It's now changed, and if we take a look at the next candle, it's confirming there are now more buyers than sellers. This is a good time to get long this currency. Now, do we know what's going to happen in the next candle? No, but we know that we're buying it at a time when there's more buyers than sellers. That can change, but it's much better than buying when there's more sellers than buyers. That's like jumping in front of a train, hoping that the train turns before you get there. This is telling you, hey, right now there's more buyers than sellers. On the other side, you have a bearish engulfing candle. Same thing. Look at these candles on the way up. Nothing but buying, nothing but buying. We get an open, we get nothing but selling. This was the day that this equilibrium, these balance scales, when they changed. There was clear buying here. We have big bodies. We have lots of up movement, lots of price action to the upside. We get this. The next candle is our confirmation candle saying, yes, it is moving lower. And so it's definitely bearish here. All right, I'm going to kind of, like I said, I don't want to get into like every single candle, what it means. There's lots of information out there. I really wanted you to feel, what am I trying to say? There's the science to this, and then there's the art to it. And the art is understanding the concepts. And I really want you to get to the point where you look at a candlestick chart, and it isn't just blocks. It's a story. It's a total story. It's telling you everything. It's telling you what is happening at this moment. I want to go back to one of the charts here. And let's just go through one of these charts here. Okay. Let's go through one of these charts here and just see how it tells you a story. Let's start all the way over here on the left. All right, we have an up candle. The next candle we get is that inverted hammer, or that hammer, to where it's telling you, uh-oh, things are losing momentum. Where there was a clear imbalance of buyers and sellers, it's actually slowing. Look at this candle. This is a complete supply and demand balance. It hardly went anywhere. So it's losing the momentum. The next candle is down. So we know at this point here, we now have more sellers and buyers. We have more sellers and buyers. We don't know how long that's going to last, but we know it's going to, again, we know that's where it's likely going. The next candle is down. The next candle is a doji. Okay, again, our doji is a sign. It could change here. So you can see it went back to neutral during this period. We don't freak out. We wait for our confirmation. The next candle, it's another down candle. So we paused briefly, and now we're back to more sellers and buyers. However, the next candle, we get an up candle. On this candle, we know we have more buyers than sellers. The next candle is a confirmation. Again, it's actually more of a doji, but you can see here, at this candle here, there's no question that the equilibrium has shifted. There's now more buyers than sellers in the currency. Like I said, we don't know how long that's going to last. But we know if we have to pick a side to be on, I want to be long this currency. Why? Because right now there's more buyers than sellers. I don't know what's going to happen in the future, but I want to get in when I know there's more buyers than sellers. I don't want to buy something when I know there's more sellers than buyers right now. That's a terrible strategy. So as you can see, we get some candles up. We get our first little down candle, but again, it's nothing substantial. We get an up one. Now we get a little bit of this shooting star doji. And we get the confirmation, uh-oh, you know what? This is where the equilibrium changed. Now you can see, as I said, we don't know what's going to happen on the next candle. You know, based on this charting, you would think this is going to go down more, but it didn't. And we started to get some upward movement. We started to get these sideways doji candles that told you, hey, this is more of an equilibrium down here. There's not tremendous selling. And then I'm going to draw this resistance line. Once we break through that resistance line, we're now on a breakout, and we know that there's more buyers than sellers. This is a great time to get long. It's a great time to get long. And you can see it's a little messy, but it's all very tight candles. That's a nice run. That could be a lot of pips in that run. We get this big move higher, and then we get the change in the equilibrium. This is where the equilibrium flipped over, was no longer more buyers and sellers. Again, we don't know how long it's going to last, but we can see that there definitely was a pullback. When you look at candlestick patterns from here on out, I really want you to look at them like I look at them. It's a story. It's telling a story. So the next time you look at a chart, I really want you to remember what I said. Look at those candles. They're telling you a story. When you get these candles that open up at the low, close at the high, it's screaming you saying there's a huge supply and demand balance right now. And you'll see they'll continue. And then at some point, you'll get a candle that looks like this. It's telling you that the momentum is probably dying. You get a down candle, the next one, you now have a confirmation that, hey, it's now more sellers than buyers. I don't want to be long this. Now, of course, you don't just jump out. You've got your trading plan. You got everything all figured out. But as far as you know, you're at least going to have to sit through a pullback. You know that for a fact. If you got long and then you get these two patterns, you know you've got to sit through a pullback. So don't be surprised if it pulls back for a couple of periods. But then all of a sudden, you get your hammer pattern. Now, hey, you know what? Maybe this is a good time to add another position. You know, dollar cost averaging or legging in. Once you get the confirmation candle, you now know the run's back on. You don't know how long it's going to last, but you know that right now there's more buyers and sellers again. That's a good place to be. All right, so again, I really wanted you to get not the name of all the patterns out there. You can go out online and get all these names, but no one really teaches you the art behind it, how to feel it, how to look at that and understand what is going on. Now, as I said, if you look at very short-term candles, you know, you look at a 1-minute chart, you know, they're going to be neurotic. There's going to be so much that happens in there. It's not very meaningful. But when you go out to 15-minute charts, hourly charts, all of a sudden it becomes really clear. And once you go out to a daily chart, it will blow you away. It will blow you away. Now remember, candlestick charts are part of everything. We still need to be used support and resistance. We need to use our patterns. We need to use a lot of other things. You can't just trade off of candlesticks. But if you trade off of things like candlesticks, support, resistance, you're trading the price action. You're not trading derivatives of price action. You're not trading these indicators that take price action and put it in a formula. You're literally trading price action. And that's going to lead to a much, much better overall result. All right, thanks for joining me, everyone. As I said, jump out there, do more research. Again, I have a book with 700 candlestick patterns in it. If you want it, I actually, to be totally honest with you, I lent it out to someone years ago, and I never got it back, and I don't even remember who I lent it out to. So, in full disclosure, I do not have that book anymore, so don't ask me if you can borrow it. But just learn some of the important ones. You know, we talk about them, those dojis, the hammers, things like that. You don't really need to know their names, you just need to know what they mean. It's telling you that supply and demand changes. And I want you, the next time you're out and about, if you see a pair of those balance scales, and as long as they're not too expensive, buy them. Buy them, bring them home, and put it in the place where you trade. They will remind you that the only thing you care about is supply and demand. Everything else is just, I think I called it crap earlier. It's not crap, but it's sometimes you lose what you're trying to find. All of those charting things are to help you try to find supply and demand. That's really the key to this business. All right. Thanks, everyone. Thanks for joining me.